So Matt, in terms of peer-to-peer lending, some people have described it as democratizing lending. I wonder if you could explain SocietyOne's platform and what you're seeking to do in the lending space.
Absolutely. Well, we have developed a P2P lending business in Australia that uses a technology platform to connect creditworthy borrowers on one side with investors on the other. So in that way, we're bypassing traditional intermediaries, for example, banks, and allowing creditworthy borrowers to post loans in a marketplace and have investors come and bid to underwrite those loans. So in a sense, what we're really doing is allowing borrowers to test the market for a price that will meet their credit profile. And we think that's a very interesting way to offer borrowers new options and to give investors a chance to participate in an exciting new fixed income asset class.
So peer-to-peer lending has really taken off in the US and the UK, a bit less so here in Australia. So can you explain the difference and the relative success offshore?
One of the important points to note is that P2P lending has been operating for a number of years in the US and the UK, and it's a very recent phenomenon here in Australia. In fact, we've only been going for a couple of years in Australia. In the US, Lending Club, for example, one of the largest P2P lenders in the world, has been operating now for almost 8 years and has now reached a loan book that exceeds $5 billion. In the UK, you have businesses like Zopa, lending in the consumer space, and Funding Circle, lending in the SME lending space, that have been operating for quite a number of years. I think those markets have benefited from consumers who have dipped their toe in the water and tried the model, and people have had a great experience. And as has happened in other industries, when people have a great experience, they tend to talk about it, and it takes a while for that effect to really take hold, but then you start to see some rapid growth.
So thinking about the market dynamics here in Australia today, why is the time ripe for peer-to-peer lending in today's terms?
We are at a point where there's a lot more technology and a lot more data now to support some of the things that banks have traditionally done for a very long time in terms of credit decisioning and risk assessment and underwriting. And as that data becomes more available and as new forms of technology make it possible for people to apply for credit through lots of different channels and through lots of different devices, I think there's definitely a growth in interest amongst consumers about identifying new ways of meeting their credit needs. On the other hand, I think that we're at a cycle in terms of the interest rate cycle where a lot of net savers are looking around and wondering where they can get a return in their fixed income investments. And one of the interesting things about markets like unsecured consumer credit is that it's a market that, whilst investors haven't traditionally been able to access it directly from an investment point of view, it's a market that doesn't move in lockstep with the swap rate historically. And so unlike these other fixed income asset classes, it tends to deliver quite attractive returns if you can provide diversified exposure to investors, and that's absolutely what we aspire to do. So I think for those reasons, together with just the general sense that disruption seems to be in the air and new business models are emerging all the time, and I think people, particularly people in Australia, seem recently very open and interested in new ways of thinking about solving financial challenges, and so I think it's a great time.
Well, the market certainly was very interested to see Westpac embracing digital disruption in terms of their buying into SocietyOne earlier this year. Perhaps you could talk a little bit about the nature of that deal and whether it involves Westpac actually directly providing customers to the SocietyOne platform.
Yes. We're very excited to have Westpac through their Reinventure arm, a special purpose fund that they've created to invest in early stage and disruptive technologies as a participant in the SocietyOne business. We can't talk too much about a number of interesting projects we have underway with Westpac, but you'll see some announcements in short order. What I can say is they've been a great strategic partner of ours, and they really are very interested in helping us think about how to build the right platform for growth. And I would strongly encourage anyone else in the fintech space to have a look at the Reinventure Fund. They're good guys and they've been very supportive.
In terms of the types of borrowers that you've been able to assist with the platform to date, is there a certain profile or a certain industry segment within the SME sector that is particularly suitable to SocietyOne's platform?
Essentially, we're very focused on the unsecured consumer lending segment, and then we think there's a number of niches in the SME lending segment that you mentioned, particularly in the agricultural space, where you can offer investors direct participation opportunities in secured loans to earn attractive rates of return. So they're kind of our focus in terms of the product side. In terms of the customers that you asked about, we tend to focus on people who are aware that they've made sound and sensible choices in terms of management of their finances, either as households or small businesses. They understand the basic concept of cash flow and living within their means. They have an explainable life event that needs some credit, and they're wondering why they're paying the same rate as everyone else in the market. So the customers that tend to come to SocietyOne are people or businesses who understand that if I have a great credit track record, I really should be getting recognition for that in the price that I'm paying for my credit products. And one of the things SocietyOne has done is pioneered risk-based pricing in Australia, which is a very interesting new dynamic that banks and others have been talking about for a very long time, but haven't actioned, and I'm proud to say we have. So if you have a great credit score and you're an SME with excellent track record, then you really should be getting a lower rate than the general pool that you're in. And hopefully people like SocietyOne are blazing a trail there and showing others that that's the path we should go down.
Great, thank you.